What's good, YouTube? Welcome back to the Stock Hustle channel with your boy William. Today is Monday, November 22nd. As always, guys, nothing that is discussed on the channel is financial advice. It is simply financial education that I then hope people will then use to understand you don't have to slave in 9 to 5s if you don't want to. You can easily hustle 24/7 in the stock market and still accomplish all those financial goals, dreams, and aspirations you've set for yourself. As with anything else in life, guys, you're always going to get out whatever you choose to put in. But at the end of the day, it all falls back on you. So let's go ahead and put in some work then, so we can make that transition a lot more easier for a lot of people, right? So recently, a lot of people have been reaching out to me, asking me for help, specifically around, hey, how do you find some of the plays you talk about? Or, hey, how do you find some of the options that you specifically play, right? It's been more questions about finding things versus understanding things. So I figured, why not make a video specifically showing people how I find some of the plays that I find, right? That I talk about in some of the videos that I make, right? Because again, at the end of the day, the only reason I do this as a hobby is to try to teach people and help people. So let's go ahead and help some people, right? To answer your direct questions, or at least that's the way I see it. But for that, I'm going to rely on my favorite tool that I frequently talk about in just about every video that I make, which is Unusual Whales, right? I absolutely love this tool because I love all the information it provides you. I love all the resources that it gives you. And I love how they love to help retail traders, right? At the end of the day, that is what this website was designed for, was to help retail, right? So one of the things that you can use specifically from the flow page, if you click on the flow, right, when you start, it normally starts this way. Click on this navigation bar. Down here, there's a couple sections that I like to use frequently, right? I haven't really talked about them because I figured most people knew about them, but I guess I'm wrong on that. So why not talk about it, right? Specifically under hot chains and tickers, you can always go in here and it's going to show you the most popular options chains, number one, for the most popular option chain, and then the hottest tickers, right? Excuse me. Specifically, anytime I go here, normally I like right away hide the indexes because I don't want to see the SPY. I don't want to see SPX. I don't want to see QQQ. I don't want to see the VIX, right? That's not relevant to me, right? I want to find an opportunity in a play specifically, right? Now, obviously, a lot of this information is hard to understand and interpret, right? But essentially, at the end of the day, once you understand how to read it, it becomes a lot more easier, right? The website is called Unusual Whales. You are looking for unusual activity in options chains, right? What is unusual? Well, we already know spikes in volume over open interest is something to be considered unusual. Another thing is specific spikes in volume of calls or puts, right? Depending on if you're playing a put or if you're playing a call, right? You can play both. A true investor can play both up and down, right? Don't think it's just one-sided. It's not. It's to your preference, right? Each person has different preferences. Depends on the nature of how you choose to trade. But in here, when you go down here, right? Essentially what you're looking at is it's giving you the call volume and the percentage of increase from the day prior. So specifically, we have Facebook with 106% increase, right? On the put side, it's an 87% increase. Well, here's one that stands out right away. MU, 287% increase versus 221. I recently talked about MU, so I'm going to just use this because I've just recently made a video on it that I uploaded to YouTube. You click on the ticker, right, and it takes you to this historical MU flow. A lot of people have a lot of trouble understanding this specific breakdown, and rightfully so, right? It's a lot of lines in a chart, and you don't necessarily know what they mean, right? So I'm going to try to do the best I can to help you understand this chart, right? One thing I always can get rid of usually is because I can easily look at a chart and pull up an MU chart to find the price. I don't necessarily use the price, right? So now you're down to three. You have open interest, call volume, put volume. Specifically up here, whether you're playing a call or a put, this is pretty relevant to you, right? If you're on the call side, obviously you want to see that the bullish premium has a higher percentage than the bearish premium, right? You would not want to be playing a call when the bullish or the bearish premium is at 70% and your bullish premium is at 30%, right? That wouldn't work that way. You would want to flip that position, right? You would want to be more bearish than bullish in that case. In this case, we're right now sitting at 51.2% versus 48%, right? So now we have call versus puts premium. Obviously, you see that it's 58% to the call side versus 41% to the put side, right? Just for premiums, right? Now, again, you can play a put and be bullish. You can play a call and be bearish, right? I'm going to help you better understand that in 2 seconds. And then you have call versus put volume, right? Obviously, we see that it is heavier to the call side with 62% versus 36% to the put volume, right? So if you have trouble understanding when a call is bullish or when a put is bearish, right? Or vice versa. They actually have a preset filter on here that you can select that it will help you better interpret that information, right? It's right here. Bullish premium, bearish premium. When you hit bullish premium, it's taking into account all the puts and all the calls that are bullish, right? And it's throwing a line on the chart so that you can see where it is compared to bearish premium. This is something I always try to teach people. When people ask me for help specifically, this is one thing I like to teach them right away. Man, excuse me. Because it rightfully helps them understand the flow better, right? Because when you go into the flow, obviously the flow can be a little bit overwhelming. Where's my mouse? The flow can be a little bit overwhelming trying to understand all this information, right? Because again, you can buy or sell a put and it's bullish, or you can buy a call or a put and it's bearish, or you can sell a call and it's bearish, or you can, buy a call and be bullish, right? There's a lot of different ways. So here, just by selecting these two options, it tells you where the premium is going. Is it bullish or is it bearish, right? Obviously, if you're playing a call, you want to see it higher on the bullish side. Obviously, if you're playing a put, you want to see it higher on the bearish side, right? It depends on your preference and what you're choosing to play, right? Specifically, with this point, you will want to then pull the flow, right? Like I normally do. And again, you don't have to treat anything that I do as fact. This is all simply just education. Again, you can use this freely however you choose. This is just how I use it, right? Normally, I pull the flow, and what I do is I'll pull the chart, right? So let's go ahead and pull up MU. For that, I'm going to use my TradingView. And I recently did a video, as I mentioned, so I have a little bit of information on MU. I did do a breakdown into the earnings. It is on my YouTube channel. If you want to check it out, feel more than welcome to. But essentially, what you're looking for is, at this point, trying to interpret what the candles are telling you and comparing it to what the flow is telling you, right? Some people struggle with a lot of candles on a chart, so it's simple. That's easy problem, right? Weed it out to a chart with less candles. Go to the weekly, right? Look, we just had a breakout. We have 3 green consecutive candles. We have a candle forming directly over an SMA, which again, that is a very bullish sign. This right here is an entry point that you would see entering a position or wanting to enter a position. Part of the reason why the video was created in the first place was again because of these signals. And as you see, we've now formulated another green candle. We are now at 83.03. So now we can go look at the flow, right? No filters on the left-hand side. As you see, everything is turned off. Again, you have to make sure that this is set to 250. I made that mistake before. Not going to do that again. And then you want to break down the flow and see what it tells you. Well, obviously, we can see that for this Friday coming up, 11/26, we are more bullish than bearish. And also the other strike or expiration that stands out is 12/23, 2 days before Christmas. And then January 2022 is also more bullish than bearish, right? At what strikes? The 77, the 85. Well, again, remember, we're sitting at 83. So we're sitting essentially here on the chart. So that's a $2 jump. And then you have the 100, right? Now you can start filtering out specifically. There are many ways to do that, depending on your preference in YouTuber or your preference in the flow, right? Specifically, you can exclude deep in the money. That's one that I like to use a lot, or remove, because I don't want to see what people are playing for high deltas. And check this out, right? Bull versus bear premium, we're at 75% versus 24%. Super bullish, right? Again, all the pies are pretty much reflecting the same data. This is very, very bullish. 11/26, you see that it is more bullish than bearish. December 23, once again, more bullish than bearish. And January as well. Again, at the strikes, the 77, the 85, and the 100. Specifically basing it just on those two things alone, you can easily interpret that this will continue to push to the top side potentially. But again, it is a holiday week, so you need to understand we have less trading days. So the market could easily flip on us. It depends, right? Another way or another tool you can use or resource you can use, and that's what leads me into this piece of the video, right? To filter information or find information, you can go into live news feed, right? You can plug in your ticker and it's going to give you the most up-to-date news articles specifically on your ticker. In this case, we're using MU, right? So you can see that Bernstein's downgrades Micron Technology to underperform from outperform, lowest price target to 58. This was on 10/25, so it's not relevant. We're now in November. This is almost a month later. So as of this month, we have no current news activity that could affect our ticker. So again, this takes this out of the question. Again, it's another resource Unusual World gives you to find and filter information, right? But if this doesn't help, or if you feel this still isn't enough to help you find a play, I have one more resource you can use, right? And that is right here. It's a new section called Flow Alerts, right? So under flow alerts, what this information is doing, and there's actually rules you can read up on, right, as to how it's providing you information, right, how it's filtering to you so that you can better understand it. Please take the time to read this, as it will help you and benefit you. Anything that they put on this website is literally built and put on this website to help retail. So please take the time to understand it, right? But essentially, if you go in here, I've had to play with this a little bit back when it was still in beta testing. So I have a little bit of experience. I wouldn't say a significant, but I did get to mess around with this, and it is pretty cool. So for example, right, this is a single leg trading above ask, right? So when you click on this little link right here, it's going to pull up the trade for you, and it's going to show you some pretty important pieces of information. If you can't find a play, always go here. These are going to be some pretty good plays to take a look at, right? So this is for KHC. It's a call for 11/26, which is this Friday coming up, right? A day after the holiday, Thanksgiving. At a $36 strike, the bid ask was 15 to 16, and they paid 17 cents. So they paid above the ask for this contract, right? At $162,000. At this point, before you do anything else, please pull up the chart. KHC. We'll go back to the 1 day, 1 year. This is my favorite chart. We'll zoom out. I have already taken the time to preset some trend lines, as you can see. But again, if you have too many candles on the chart and it confuses you, you can easily change it to weeks, and it makes it easier to interpret. Take a look. So we have a support line on the bottom, trending essentially from September of 2020 to current. And you have this trend line going down, or this resistance line from the top side going down, essentially from May of this year through current. You may be wondering what the heck happened with this giant red candle, right? On this day, you saw this major gap down, right? Well, specifically, if you remember, I told you about the news feed, KHC. So we'll go in here. We will plug in KHC, and you will see exactly what took place. On 11/18, Kraft Heinz announces 1.1 billion secondary stock offering. Anytime there is an offering, you're normally going to see a rundown in price, which explains this gap down here. However, what normally happens after an offering, people buy the dip and they ride the price back up, right? That's a pretty common thing that happens. Obviously seeing a very, very bullish bet in unusual wells, as you can see from the options chain, which we can go back into the flow. We can go away KHC, and we'll take a look at this one now. Let's take this away. See if we can find that trade right here. 15 to 16 bid and ask. They paid $162,000 bullish call for 11/26 this Friday. You have another sold call, which is a bearish move, right? At 35, bid and ask was 55 to 63, and they played 56, so somewhere in the middle, a little bit above the bid. This was for 336,000, right? 12,900 volume over 10,400 open interest. Very bearish, right? But if we go into the chart specifically to try and interpret this data, take a look. You see that it is more bearish than bullish for the 11/26, but on the December 3rd, the week after, it is more bullish than bearish, right? At what strikes, the 35 and the 36 stands out right away. So now we can go in here and start filtering some data out. So let's go ahead and do out of the money only. This is one that I like to look at a lot frequently. Go into the charts. And now we see this specifically. This is the 11/19 this past Friday. This is the 11/26. It's pretty much square even. Very little disparity. I think it's 5,000 disparity. 5,000 different. A little less than 5,000. And then 12/3 obviously being the most different. That is more bullish than bearish, specifically at what strike. The 36 still stands out specifically, right? So based on being a holiday week, looking at this chart, looking at that there was an offering, looking that it now has fallen to this essentially support trend line, right? You could either expect another red candle to formulate right above it, or a green candle very low, right, pushing it to the top side. Again, it's a short week. It's very hard to say what it will do on a holiday week. What I would say, based on the flow, if you are interested in this play, I would probably wait a couple days before entering a position to see what it does specifically. Once you see a couple more candles form, it'll give you a better understanding of what position to play. But obviously this does spark my interest that the 12/3 is very bullish over bearish, right? And again, pay attention to the strikes. But again, you can filter data, put it on your watch list. Either way, this is a good way for you to find opportunities. There are more opportunities than just one in the stock market. Please remember that, right? This is definitely a good area you want to start using to reference leads and opportunities specifically for yourself, right? Like repetitive trades, right? Having a significant amount of repetitive trades is a very bullish sign. That's another feature in this section you will find, right? Again, Unusual Wealth has a ton of information that it all dedicates to helping retail. It's just you guys taking the time to understand how to interpret the data. But I think you guys get the point. As always, if you have any questions, please don't hesitate to drop them down in the comments. Or you can always tweet me or DM me on IG or Twitter. Don't forget to like and subscribe to the video, as I always appreciate you guys for that. And as always, guys, I will catch you in the next one.